Hi and welcome to munshigiri.com. In this tutorial, we are going to talk about how can you remember the formulas in your chapter leverage. First of all, what does the term leverage means? Leverage implies debt. Okay? It is the amount of debt that a firm uses to finance its assets. And what is the objective of using debt in its capital structure? The objective is to enhance the returns to the owners. Now, there is a firm that uses lot of debt in its capital structure. It is known as a highly levered firm, whereas a firm with no debt in its capital structure is said to be unlevered firm. The term leverage in general implies to a relationship between two interrelated variables. Now there are three types of leverage. One you have is an operating leverage. Then you have financial leverage. And the third one is a combined leverage. Okay. Now what is an operating leverage? Operating leverage may be defined as the employment of an asset with a fixed cost in the hope that sufficient revenue will be generated to cover all the fixed and the variable cost. Now, how do you calculate the operating leverage? It is contribution divided by EBIT. The formula for operating leverage is contribution divided by EBIT. Operating leverage is when change in sales produces a greater change in earning before interest and tax. It is the use of assets for which a company pays a fixed cost. It is called as a operating leverage. Right. What is degree of operating leverage? The firm's ability to use fixed operating cost in order to magnify the effect of changes in sales on its earning before interest and tax. What does degree of operating leverage measures? It measures the sensitivity of operating income in respect of change in revenue or change in sales. Now, how do you calculate degree of operating leverage? It can be calculated as percentage change in EBIT divided by percentage change in sales. In simple words, it can be defined as the use of funds with a fixed cost. What does it mean? Use of funds with a fixed cost. It means use of debt in order to increase the earning before interest and tax. That was about operating leverage. Okay. Now, what is a financial leverage? Financial leverage is the use of funds with fixed cost, that is use of debt, in order to increase the earning per share. Now, what is the purpose in case of operating leverage? It is increase in EBIT, whereas in case of financial leverage, it is increase in earning per share. So, how do you calculate financial leverage? Financial leverage is equal to earning before interest and tax divided by earning before tax. Okay. What is degree of financial leverage? It is the ability of a firm to use fixed financial charges to magnify the effect of changes in EBIT on EPS. What is the formula for degree of financial leverage? It is percentage change in EPS divided by percentage change in EBIT. What is combined leverage? When both operating and financial leverage is used in order to magnify the effect of sales volume change on the earning per share of the firm. And how do you calculate combined leverage? It can be calculated as operating leverage multiplied by financial leverage, or you can say it as combined leverage is equal to contribution divided by EBT. How do you calculate degree of combined leverage? Degree of combined leverage is the ratio of percentage change in earning per share to the percentage change in sales. It indicates the effect of sales changes will have on the earning per share. So this can be calculated as percentage change in EPS upon percentage change in sales. So now comes the part of remembering these formulas. In order to do that, first of all, let us see how can you calculate the earning per share from sales. So here you go. You have the sales. From sales, you deduct the variable cost. What do you get? You get contribution. From contribution, you deduct the fixed costs. And what do you arrive at? Earning before interest and tax. From earning before interest and tax, you deduct the interest. This gives you earning before tax. Out of earning before tax, you will deduct the tax. This will give you earning after tax. In case there is preference share capital, you will deduct the dividend payable or paid to the preference shareholders. That is dividend to preference shareholders. After this, you will arrive at the earnings available to equity shareholders. Now, when you divide this earnings available to equity shareholders by the number of equity shares, you will get earning per share. So this is how you will reach to earning per share from your sales. Now, how can you remember the various formulas of operating leverage, financial leverage, and combined leverage? Now look, the arrows on the right hand side will point downwards and the arrows on the left hand side will point upwards. So first thing you have here is contribution and second is EBIT. So this is right hand side, so this arrow will point downwards. What is this? This is operating leverage. Now we'll start with this point EBIT and we'll move to EBT. This is your financial leverage. How do you calculate the combined leverage? Obviously, it is the multiplication of operating leverage with the financial leverage. This is your combined leverage. So what are the formulas? Operating leverage is contribution divided by EBIT. Financial leverage is EBIT divided by EBT. And combined leverage is contribution divided by EBT. Now the term where your arrow ends is the denominator. So here in this case, EBIT is the denominator. Now coming to the formulas of degree of operating, financial and combined leverage. We start with this EBIT and we go to sales. Okay. So what will be the formula here? Percentage change in EBIT divided by percentage change in sales. This is your degree of operating leverage. What is degree of financial leverage? You start with earning per share and you end your arrow here EBIT. So this is how it is. This is degree of financial leverage. That is, percentage change in earning per share is to be divided by percentage change in EBIT. Coming to your formula of degree of combined leverage, degree of combined leverage. Percentage change in EPS divided by percentage change in sales is your formula for degree of combined leverage. So that's all for today's session. I hope you enjoyed it. Thank you for watching Munshigay.com.